Hi, good evening. So today I'm here to explain to you one of my favorite strategies that I had devised by watching price action, especially in the lower time frames, over many months across different charts amongst the Indian stocks that are listed. So this is a strategy I'm going to share with you today, which proves to be quite useful, and you can find its own worth by trading yourself or doing paper trading with it for some time. And I highly recommend that approach. Instead of going directly towards trading, you should first trade them in a demo account or with the paper trading. You should watch price action closely, how the strategy unfolds. And then, if you feel that the time is right and the strategy suits you, then you may try it out. So, as I watched price action unfolding across different charts and over the years, one thing that brought to my notice is particularly these strong wiki candles, if I may say so. If you can watch this chart, this is of Hero Honda, Hero Motor Corp. It's a 5 minute time frame chart. And this candle, which I am pointing with the mouse right now, you can see it's a long wiki candle. This one over here, this one over here. So there are many wiki candles out here, but these two particular are long wicks. And usually what happens is that in this case, the price was moving nicely up in this time frame, and it encountered some pending sell orders somewhere over here, because of which prices immediately was pushed down because of the ferocity of these sell orders unleashed over here. And no surprise, this was a nice supply sitting out here. Although it was tested once, this did indicate that there were more sell orders sitting here. So because of the sell orders sitting here in this particular supply zone, prices did come down quickly, and then it did give a good follow through on the downside. So what happened over here is where you should start watching price action, because what happened when price came back and it engulfed the high of this pin candle, if I may say so, is what this strategy is all about. So here it all starts. The first, the pin candle is formed. Then you watch for the engulf or the good break of this pin candle, and you watch for two zones once this engulf happens. One zone is the first one which caused the break of this pin candle, and second, where did the entire up move which broke this pin candle start from? After, of course, the retracement from where the pin candle had started formation. So here is from where if I mark this is basically the origin or start of this entire up move, which engulfed this pin candle and overcame the sellers or the sell orders sitting there. And this was the sort of the source from which the break happened. This is the origin and this is the source. So you will always mark two zones like this. Okay, and there is high probability that I have noticed that either of the two or both of these zones will work nicely, giving you at least a 3-to-1 risk reward move from those zones. So, how I have experienced and devised this strategy is that I take trades in both of these zones. So, first, I will enter a long trade over here when price arrives at this particular zone. See how price came back here, and look at the lovely move up from this zone, right? It moved up. And the second set of orders for a long trade is over here. But from my experience of trading this strategy over the years, is that if usually the first zone works, then I avoid going long at the second zone. So if the first zone has worked, it gives a nice reaction, and I already have taken a 3-to-1 risk reward profitable trade, then usually I don't trade the second one. Right? But sometimes this also works. You can see over here in this particular example that both of the zones have nicely worked. There was a reaction in the first zone and there was a reaction in the second zone itself. Right? And both of them definitely yielded a 3-to-1 risk reward. If I just to show you how much this had yielded. So yeah. So it was 3.82 RR. Nice decent one over here. So this is the first example I wanted to share with you. You can see that as this particular zone played out, another pin candle was formed. But this time, it was on the opposite side. So prices reacted from this demand zone, creating a nice pin candle, which indicated that there were strong buy pending orders sitting here. So price reached till here, and from here the price started sort of its downward journey. And it was here that the break happened, right? This pin candle was broken or engulfed here. So the zone that was the source of this break is this particular zone. So this is the supply zone. I mark it with red. And the second zone would be the source from which the selling started. So after this pin candle happened, this is not the source. Price went up till here. This is the highest point. The zone stands. Right? And you can see that when prices was falling from there before engulfing this, prices did go there and started falling from there, indicating that there were sell orders sitting here. But may I see that once price already went there before engulfing this particular pin candle, some sell orders were already consumed. So the power of this zone has already been depleted to some extent. But this one still stands fresh. So let's watch what happens. See how prices went there, right there in that source of engulfing of this pin candle. This nice move inside, quick move inside, and then look at the fall from there because of the pending orders. So again, you had a huge trade, but I would get out at a 3-to-1 risk reward for this type of strategy. Right? You can see one more pin candle over here. And then the source was this one. And I would say the origin was this one. It's a huge one. Probably it's better to go to a lower time frame and see if there is some basic candle here. If not, I would like to mark both of these. Right? This is the source of the break engulf of this, the downside of this pin candle. So when price returned, the first one did not work, so it broke, right? And again, the second zone also did not work. That's fine because as we already know that no strategy can work 100% of the time, but this has a very good, I would say, working probability. So let's see more examples. So here is a nice, again, a nice pin candle over here. And then it was engulfed. So this is both the source and the origin of the break. This is a good one. So prices now raised upside. Yeah, and again a pin candle was formed here. The pin candle was engulfed. If I just draw a horizontal line here, see how this was This was engulfed over here. So creating this is the source and this is the origin, which were like pretty much on top of each other. So in such cases, we normally go with the furthest one. And there were orders here. It reacted nicely from here. This might not have yielded a 2 to 1, a 3 to 1, but certainly a 2 to 1. Here again, you can see a nice pin candle here. And then the source and the origin were like the same. So price engulfed this over here. It went back in and then dropped. Dropped nicely. Right? Another one we can see over here is that, look at this pin candle over here. And then price returned till here, came back, and then moved up. So this is the source, and this will be the origin. So the source gave a mild reaction and broke. So if the source breaks, if it does not work, then trade the origin. The origin, if you had your stop loss slightly below it, you would have not been stopped out. There was a little fake out here, then price did went up from this origin zone. Another pin over here on the opposite side. This pin was engulfed by this candle, and the source is this one or this one, whichever you want to take it. This is level on top of level, which failed. That's fine. I would lose 1 hour over here, and since this was a pin, price came down. The lowest point over here till it broke this pin was this particular zone. This was the origin. And see how nicely the origin worked. So I would place a trade both over here and over here. Once this fails, I lose 1 hour. Once this works, I take a 3 hour. So ineffectively, after 2 trades, I have 2 hour in profit. So this was the last, this was where prices stopped and we don't have any further price action. So you can go out and test across different time frames. This is still live. Price has not arrived here. This might work whenever price arrives there. So we have seen all these examples over here. See how lovely it works. So these were all pin candles, went up till here. This was the origin, this zone, right? And where was the source? The breaking happened with this candle. The source was here. This one. So in this case, the first zone, the source, gave a nice 3 to 1 reaction. So I would now not trade this origin because the trade has already worked. I have my 3 to 1 RR and I'm happy with it. So let's check out this one. This is a nice pin indicating some supply over here, and prices came back down. This is the lowest point till prices engulfed over here. Okay, it's difficult to conceive. This is all compression price action, so it's difficult to conceive the or to find out the source. Price did break over here. So source would have been this. Price faked out a little bit and went up for sure. But in this case, I would have not traded the source because of this compression price action. And what is compression? If you don't know, then please go and watch the past videos. I have explained with examples what is compression. Let's see how the... Alright, so I think my marking was a bit too pessimistic. So since this was also a basing candle, should have marked like this. And prices went in and gave a nice reaction from there. Right? So the source we avoided, the origin we traded, and we made a nice profit. So you can see there's one more example here. If this is the pin, price went up, this is the source, right? And it was broken over here by this candle. So the origin becomes this one. So price broke it, came back over here, and then dropped. Oh, and look at this. Price went back to the origin as well, and then dropped from there. But once the source works, personally, I do not trade the origin. If the source fails, then definitely I place an order at the origin. In this case, both of the zones worked. So you can go across different charts and across time frames, but I generally prefer the lower time frame strategy, the 5 minute, the 3 minute, the 10 minute, the 15 minute time frames. These are good scalping trades. A quick 3 to 1 RR, 2 to 1 RR trades. Not the long, open and hold type of trades with long targets, but definitely for intraday scalping, for intraday trades, a decent 3 to 1 RR is normally yielded. So hope you enjoyed this particular strategy. I would encourage you to open up your own charts and test this across different scripts. Go for blue chip scripts like Hero Motor Corp, Bajaj Auto, ICICI Bank, the banking stocks, the heavyweights. So go for it, and I'm sure you would love to see more such zones working with this strategy. I will personally share more examples across different scripts. So very soon. Until then, thanks for watching, and please do subscribe because I'm going to present a lot of important learning material over the course of time going forward, and plenty of examples and live zones across different charts. I know that many of you have asked me to do analysis of stocks from a higher time frame perspective, particularly for investments. This particularly interests people who are not into full-time trading but who want to invest or trade from a positional multi-day perspective. Price action works equally across different time frames, so you would find it very useful even for long-term holding of scripts and long-term positions in different trades. So I would soon do analysis from my price action perspective on different liquid stocks of the Nifty 50 index, and I would share videos, and you can take insights from those and learn. Hopefully you enjoyed this strategy. Please go and practice, and if you like the video, please do like it, share with your friends. That's all for today. Thank you very much. Have a great day ahead.